We are live.
Abhay, you are on mute.
Oh, good evening, friends. A warm good evening, friends. Thank you for joining us for the webinar, How to Ride Through Volatile Markets. Last few weeks has been very difficult for the financial markets. It has been more or less more events spanning out, wherein different uncertainties keeps on coming and making the market uncertain. To make the life easy or putting some light onto it, we are here with Mr. Ujjwal Shah, fund manager at IIFL Securities. He has 15 years of experience. 15 years of experience on the research side and handling the funds. He'll take us through the topics wherein his key takeaways would be factors contributing to the current volatility, global inflations and trend ahead, how to tackle the current volatility, focus on India, and some details on the funds that he handles. Over to you, Ujjwal.
Thank you so much, Abhay, and a very warm welcome to all the participants who have taken their time out this evening. I know a very difficult time for all the investors, seeing the bloodshed on the markets that has happened over past few weeks. Difficult times, how to navigate through this volatile phase, what should be done, what should not. So what I will do over here is make a small presentation on how I think one should navigate through this current volatility. For that, we need to first understand which are the factors which are actually contributing to this kind of volatility. So what has happened which has led to this kind of scenario which is presenting volatile markets across the globe and not only in India. So right now, investors, we can see uncertainty is at its peak. Geopolitical issue, Russia-Ukraine war, no one anticipated it. And therefore, the markets are quite volatile. Took everyone by surprise, the actions that were taken by Russia. And the strong stance also that Ukraine is still holding its fort up, which no one expected. The global inflationary trend is the biggest and far most important reason for the current decline in the market. And consequently, all the central bankers are forced, I would say, to hike their rates to control and curtail this inflationary trend. What has this geopolitical issue and COVID done is has brought up all raw material prices, and that includes commodities, oil prices. And the question arises, what will happen with the fiscal deficit of India? How will we tackle this situation on the economic front? So all in all, these all factors are actually causing this flutter in the market. First, on the inflation part, we can break it up into two. One is core and one is transitory, right? So the core inflation is something that is hard to deal with, and the interest rate cycle that we are seeing across the globe that is trending up will actually curtail this part of the inflation. But the transitory inflation, which is temporary, and which are for certain factors which, if are resolved, will lead to inflation getting spiral downwards. is something that, will happen over next 6 to 8 months. And that is what I want to focus upon over here. So one is, every country is, battling inflation for different reasons. So different countries has different reasons to, uh, uh, with respect to the inflation that has happened. So US, during COVID, US announced a very strong, I would say, relief package of over $1 trillion, where, around $1,400 stimulus checks were given to million of people. Now, if this kind of loose monetary policies are there's bound to be inflation in that kind of a country, right? On top of that, because of this Russia-Ukraine war, even they are battling fuel cost rises. So collectively, this and the COVID-related production delays has caused US inflation to spiral very high, probably one of the highest in a few decades. UK, on the other side, is battling inflation because Brexit happened. And, a very surprising factor happened in UK. They had over 1 lakh lorry driver shortages. So there were no truck drivers. So there were goods lying at the factory, but they were not able to transport the same to the end consumers. And so there was demand, but the supply was not able to match up. And this was causing the inflation. We all know why Europe is battling inflation. It's because of high energy prices. They are moved away from traditional energy waste to renewables, has caused this kind of a trouble. And now, because of their high dependence on gas, which comes from Russia, the prices have spiraled up. India, on the other hand, it is more of an imported inflation. We all know we import large part of our crude, and that seeps into different areas of the economy, starting from vehicles to house. We are seeing LNG, LPG, gas, oil, basic oil prices are also rising up. So this is causing inflation in India. So each country has diverse reasons, as well as they have their internal issues as well, which cause this kind of a trouble. But we all need to understand that, certain inflationary part is, transitory. And a very good example was LME steel prices in US, which went up by 90% last year, and which have corrected back to their original levels. We might see this kind of trend in several commodities. We might see this kind of a trend happening in, freight as well at some point in time over next 1 to 2 years. But we need to understand that if there is artificial shortage of certain thing, as and when things get normalized, the prices will get corrected. If anyone tracks Indian markets closely, this has also happened in API prices. Last year, all API companies had a windfall gain, and now the prices have significantly corrected over there. Now, COVID-led supply chain disruptions is one of the biggest cause of this kind of transitory inflation. If you could see the left-hand side chart, even during COVID, this kind of shortage was not seen on the container ship side. But during this last lockdown that has happened in China, which is still continuing, this is one of the worst scenario that China has seen, or the globe has seen, in terms of ship traffic getting stuck at Chinese ports. And for everyone's understanding, amongst the top 10 container ports, 6 to 7 are in China, if I'm not mistaken. So you can understand, if Chinese ports get stuck, the world trade gets affected significantly. And there is demand, but there is no supply, because China is not able to clear out its ports. And there is a deep congestion over there due to the ongoing COVID. So let us think it that way. China has the production, the ports are stuck. Once this COVID-led situation normalizes, China would flux the world with whatever it has produced. And everyone will see then what impact it will have on this transitory inflation. This kind of terminal congestion was also seen in North America and Europe because they were being conservative, right? So whichever containers used to come from China, they used to scrutinize it very minutely. And therefore, a ship which normally before COVID used to take 3 to 5 days to, move out, now takes over 10, 15 days. And therefore, the entire global freight trade has gone for a toss. What has this done is, pre-COVID freight rates of one container used to be around $1,300 to $1,500. And during COVID, it went up to 4,500 to 5,000 odd levels. But the worst comes now. Just some time back, it had scaled even 9,000 levels. So, even after COVID settled down, but because of this Chinese issue, the freight rates globally have spiraled significantly and by 4x to 6x. And this has led to the kind of inflation that we are seeing globally. The freight cost of many companies used to be around 2-3% of their overall cost, which for many companies have gone beyond 10%. And this is the kind of impact that, financial impact that the companies will see. What they do next is they have to increase their prices to manage their cost and to earn profits. As soon as you increase the price, it leads to inflation. So all this, has caused a lot of flutter and transitory inflationary trend. My belief is, if you can see this chart that I have put across, this kind of profits, makes everyone run towards this business. And therefore, we are seeing that new container ships are having rocket orders right now. Around 400% growth is seen in new building orders for container vessels. But even if, you look at 2019 and 2020, both this vehicles, around 200 plus kind of ships, container ships will be seen coming in over next 12 to 15 months. And with this, there would be an addition of over 15% of capacity globally, which along with the easing of Chinese COVID situation will lead to freight rates correcting. And probably we could see a significant correction over next 1 to 2 years in freight rates. Because this kind of freight rates are not sustainable, not for the businesses. And eventually they are supposed to come down. If we look at India inflation, for me, oil price and monsoons will be the key. We all know India's central bank has already raised inflation, but now they are likely to raise their inflation projections as well for FY23. So over next 6 months, we shouldn't be surprised. Rather, the market, I believe, is already discounting this factor that we would see another 60 to 100 bips kind of a rise in interest rates in India itself. But what is more important for us is, will we pause over there? Now, what will decide that we'll pause after having this kind of a rate hike? So we need to understand that India's inflation is more important. If and when this Ukraine-Russia war ends, and I'm no one to bet when it will end, but that will lead to oil price correcting significantly. As and when oil price goes down below $90, India's inflation will start tapering off. Moreover, on terms of agri inflationary trend that we are currently seeing, a single good monsoon can change that trend, And this year's prediction itself is for a normal monsoon season. And let's keep our fingers crossed that we actually have a good monsoon so that this inflationary trend can be checked at the right time. So I think a small timely correction in interest rates will not really derail India's medium-term story. And therefore, falls from this level should be actively watched, and opportunities should be grabbed by investors. Now everyone gets jittery about Fed rate hike. What I believe is Fed rate hike isn't an issue actually, but the global liquidity tightening is causing this kind of a flutter. So why I say so is what we did is we did an exercise right from 1990s to now that if Fed rate hike happens beyond 75 bips, how does the market react? And we had very mixed bag reactions in terms of how the markets performed over those 3, 6, and 12 months. So this chart actually depicts that itself. There were 3 to 4 instances when markets were actually positive, and the rest when the markets reacted negatively. So these are inconclusive insights. So it's not really the Fed rate hike which causes this kind of flutter in the market, but the loose monetary policy which flushed the global markets with a lot of liquidity. And now that the liquidity is tightening up, that is causing this kind of ruffles. But we all need to understand, there is already talks about US going into recession next year. If this transitory inflation gets curtailed, will US continue to hike rates at the pace that they are supposed to do in CY22? So there are so many ifs and buts, and only time will tell how US will react to this situation. But for people's understanding, let's not be overthinking on this Fed rate hike, but rather let's keep looking at how the liquidity scenario is globally. What this liquidity tightening actually do? People are talking about markets crashing, but what really crashed out? So what really crashed out was excesses that were in the market. We all know how crypto had risen during this time, and just because सबको लग रहा था इसकी टोपी उसके सर, उसकी टोपी उसके सर, so everyone was trying to convey each other नहीं crypto बराबर है, ठीक है, बेहतर है. Every cryptocurrency was being chased. So I just came to know over the weekend there was a cryptocurrency named Ludo or Lupo something, and it has corrected 99.9%. Now this kind of a washout that happens for investors, who don't really understand that this asset does not have any backing. Unlike an equity where there is business to back on, cryptos don't have any asset to back on. So I don't know what the future holds for a crypto, nor I do own it, nor I wish to own it. I just know for one instance that, within a very short period of time, crypto had a fall, all cryptocurrencies had a fall of 60%. So आपने जो बड़ी मेहनत से 2-3 साल में पैसे कमाए और गलती से आपने वो क्रिप्टो में लगाए होते, तो you would be still making losses, yeah. So this kind of riskier assets are meant only for, not for the faint-hearted, not for the ones who know how to make money in the market. These are pure trading bets, most of the cryptos, I would say. And this correction was required, I think this is good for equity markets. The ones who have burned their hands in cryptos might not re-enter that market. Rather, they'll understand that buying a Reliance, which has this many businesses behind them, or buying a TCS, which is one of the largest IT service company, or a HDFC bank, जहाँ पे मैं खुद जाके banking करता हूँ. These are the ones where I can see that the business is there, the future is there, and I will rather start moving towards equities. So excesses got weeded out, and also this high growth stocks, which were only trading at multiples, God knows, hope multiples, I would say. But now they used to follow this discounted cash flow model. When interest rates were 0.5, there was a perpetual target जो मिल रहा था. Now that people are saying that now the interest rates would be 2 or 3%, that is around 50 to 100% increase in their weighted average cost for the discounting. And the whole value of all the stocks is down. So you look at the fall that these companies have had. So a DoorDash is down 77%, Robinhood is down 90%, so and so forth. One bad result and Netflix was down by significant 30-40%. So these kind of whitewashes will keep happening in areas where excesses were there. And now once interest rate scenario is moving on an upward trajectory, investors will opt for risk off strategies. So we will again see value stocks getting, the respect that they used to get before, and the new age stocks will probably take a backseat, and they will restart focusing their attention to profits at some point in time. That is my outlook. So how to tackle this volatility? So there are certain softer aspects that I would talk about, and there are certain broader aspects that an investor can keep in mind. Why softer aspects are important? Because ऐसी volatility में human psyche is very important. The urge that people have developed over last 2 years to trade in every fall, to trade regularly, to invest and move out of scripts on a good interval. All these traits have to change now. This is a new market scenario and we need to adapt to those. And therefore, I would just focus on a few traits that I believe is important during this kind of a volatile market scenario. So one is, don't overanalyze situations. So a very good example is Russia-Ukraine war. हर कोई बोल रहा था एक वीक में बॉस वॉर खत्म हो जाएगा, यूक्रेन करेगा क्या, इतना छोटा कंट्री है, रशिया जैसी बड़ी कंट्री को कैसे फेस करेगा, सब लोग भूल जाएंगे, ऑयल वापस आ जाएगा अपने भाव पे, एवरीथिंग इज हंकी डोरी. It's over 2 months now. This war is still on, and I can't see any sight when it will end. So I'm trying to say, focus on things you know about. Don't overanalyze economics and things जहां पे आपका या मेरा किसी का भी दिमाग नहीं चल रहा. बट हाँ, मुझे एक चीज पता है कि मेरे घर के बाहर या मेरे नाके पे या मेरी गली पे जो डीमार्ट है वहां पे आज भी बाहर लाइन लगी हुई. तो at some point when DMart corrects, will I be a buyer into that stock? We should think on those grounds, right? क्या मैंने medicines लेना बंद कर दिए? So if good pharma companies are falling even in this markets, that business is not getting hurt because of the economic scenario any which ways. So will I buy into those pharma companies at some point in time? That will make your investing decision simple rather than commenting on what Putin, Zipping and everyone else is doing, globally. क्योंकि हम लोग छोटे हैं यार, हम लोग ये सब चीजें नहीं guess भी कर पाएंगे, nor do we have a handle over it, and therefore over analysis cause paralysis. आपको लगता है नहीं ये वॉर और चलेगा, 10 साल चलेगा, आप कुछ एक्शन ही नहीं लोगे, डीमार्ट वापस खुद के पुराने भाव पे चला जाएगा और रिलायंस वापस अपने पुराने भाव पे चला जाएगा. Just focus on your list of companies, the ones you understand you wanted to own. आज वही corrected भाव पे मिल रहे हैं. So it's time for you to act and not over analyze करके खुद को रोक लेने का टाइम नहीं है ये. Secondly, patience. Now every fall, ये क्या हुआ लास्ट 2 साल में कंटिन्यूस तेजी देखा ना सब लोगों ने. So that plays on our mind. So even a 2%, 5% correction, we think अच्छा हम लोग को buy कर लेना चाहिए. When we have a scenario जहाँ पे Fed आके बोल रहा है मैं next 6 महीने और बढ़ाने वाला हूँ interest rate. हम लोग को पता है RBI भी आके बढ़ाने वाला है. Okay, market will discount stories much ahead of them actually happening up, but we should understand that we should not put all our eggs at one go, right? So if you have 100 rupee to invest, at every fall you should invest 10 rupees or 25 rupees based on the conviction or the guidance that your RM gives you, but not the entire 100 rupees at one go, because कि अभी भी global situation में काफी सारी uncertainties है, right? The war has not yet ended, the oil has not yet fallen, और कोई signs दिख नहीं रहे फिलहाल के next 5 दिन 7 दिन 10 दिन में गिरावट आ जाएगी in this oil prices. So in such a situation, in volatile times, you know, it is the buyer's market. आप अपना भाव पकड़ के you wait for that price to come, right? You let the markets correct. Don't catch a falling knife and don't overweight also. So I can't bottom fish. मुझे नहीं पता कि bottom market किस time पे बनेगा. So I don't want to lose out. So what I am doing as a fund manager, at every 5%, 6% fall, I have identified a list of stocks that I wanted to own last year, which I am not able to own right now. But I know at what price I want to buy them. I'll wait for that price. And that is a patience that is required from all investors. If we want to make money out of this time, it is important for us to wait and wait for the right price, right? Don't follow anyone blindly. ये टाइम लास्ट 2 साल जैसा नहीं है कि किसी ने भी आके बोल लिया और हम लोग ने ले लिया. We need to do our own research in terms of stocks. This is the market जहां पे बहुत लोग आके आपको बोलेंगे अरे ये 30% गिर गया, ये 40% गिर गया. Understand this point कि वो शायद 10 times 12 times बढ़ भी गया रहेगा. वहां से अगर 30% गिर भी गया तो कोई बड़ी बात नहीं है, right? Cyclical stocks, maybe that cycle is ending. You might actually catch a falling knife and फिर आपका you will marry that stock for next 5-10 years, right? We have done that before. Let's not commit the same mistakes again. So कोई idea लेके भी आए आपके पास in terms of stocks, it's good time that you can spend, do your own research on the stocks. And बहुत नहीं करना है यार, थोड़ा financials देखना है, थोड़ा follow up करना है, थोड़ी valuations देख लो, that will help your decisions. ऐसा तो नहीं होने वाला है कि आपका भाव छूट जाएगा. You can do your research, make your list, and just wait for the time and the price to come and make those investments. Next 2-3 years के लिए investments करना है तो ये fall हम सबको capitalize करना है, right? And for that we need to stay agile and be choosy. So markets में there was a very swift move from one sector to another. Auto again came into reckoning. IT जो 3 साल इतना अच्छा रैली दिया, from last few months we are seeing IT despite good results is not seeing pickers, right? So we need to be agile. This is not a market जहाँ पे आप लेके बैठे रहो और सोचो कि नहीं चलेगा बढ़ेगा. We need to understand which stories, what is happening across sectors, and accordingly choose the right stocks within them. Not all stocks. Let's be very, very sure about this. Not this time. ये time ऐसा नहीं है कि सारे stocks भागेंगे. You actually have to select winners. And I know that is a difficult task, but that is what we all have to aim and do that, right? So this is a very important chart for everyone क्योंकि in this volatile market, everyone is jittery. तो हमें ये समझना है कि falls अगर हम दिन देखें तो the volatility looks very, very high, you know. For 2 years, 3 years down the line, we might not even talk about this. Now, how many people are actually talking about the Gulf War, which happened? तभी भी oil prices बढ़े थे, तभी भी markets jittery हुई थी. No one talks about it. 9/11 होके गया, right? सबसे बड़ा impact सबको सिर्फ 2008 का लगा है because the highest market fall happened during that time. सब लोग कोविड का भी fall भूल गए क्योंकि 2 साल इतना अच्छा दिया, right? Post COVID, but the steep decline that happened during that COVID period, everyone has forgotten, and that is what happens. You know, we focus too much on the short-term happenings. And we tend to forget the long-term wealth creation that India or other countries might provide you all in terms of investment. I would talk about India because I believe in this India story for next decade, and that's why I say अगर long-term के लिए invest कर रहे हैं हम लोग, so this kind of falls are rather an opportunity to get into good stocks. Otherwise we always keep crying कि अच्छे stocks तो बहुत महंगे हैं तो मिलते ही नहीं है, और जब मिलते हैं तो अपना जिगर नहीं है to buy those stocks into, right? So this is a time when rather than focusing on these days, look at the years और देखो कि आप कितना वेल्थ क्रिएट कर सकते हो बाय इन्वेस्टिंग जब ये वॉलेटाइल पीरियड है, राइट? So strategy for 2022 is very simple. Economy is having headwinds. Let's not beat behind the bush anymore. We all know inflation numbers आ रहे हैं. The good part is कि अभी भी credit growth को affect नहीं हुआ है. And I think a 50-100 bps interest rate hike will not lead to that kind of a credit destruction. What is important to see is outlook for next year. How and what does the government do to control inflation so that the next year does not get affected by the, right? We need to be selective. Stock pickers का साल रहेगा ये, and expectations को moderate कर लेते हैं यार. Last 2 साल इतना कमाया है, ये साल let's have tapered expectations. Let's not think कि हम लोग 30% बनाएंगे, 50% बनाएंगे, जैसे हम लोग ने कोविड पीरियड में घर बैठ के बना लिया. This is not that time. This is the time to conserve that profits, you know. So for that, patience बहुत जरूरी है. You don't need to trade daily. You don't need to invest daily, right? Wait for your time. आप खुद ही देख लो ये 5 महीने में कितनी opportunities आ गए to invest. Right? So you will keep getting chance to get into your good stocks. This time is good, but again I say do it in tranches and not at one go. Which are the stocks that you need to avoid? Now this is also very important. So avoid stocks which are highly levered. You know, interest rate cycle जब भी बढ़ता है, ये high debt companies की वाट लग जाती है. So let's stay away from this high debt companies. These are not the ones which we want to get into. Bull market में ये सब चल जाते हैं. We need to understand we are in a different market right now and let's focus on good companies, right? Hope stories जो फैली हुई थी कि फ्यूचर ग्रुप भी बच जाएगा, वो तो रिलायंस बन जाएगा. We all know what happened with all future group stocks, right? So hope stories जो बहुत सारे ऐसे मार्केट में घूम रही है, there are so many stocks. I wouldn't want to name all of them, but let's stay away from such checkered promoters and such hope stories that are in the market. कैश फ्लोज जिनके स्ट्रांग है, जिनकी ब्रांड अच्छी है और जिनका वर्किंग कैपिटल साइकिल पे अच्छा पकड़ है, ऐसी कंपनीज में इन्वेस्ट करना बहुत जरूरी है. अगेन हाई डेट नहीं है बट जिनका वर्किंग कैपिटल साइकिल इज नॉट दैट गुड, यू नो, उनका डेट आगे बढ़ेगा, राइट? सो सिनेरियोज we need to create such that, you know, the company should have good strong business modes to counter this kind of a economic scenario right now. So I think rather than what to buy, I have given you very good examples what not to buy, and that will make your decision making a lot easier. On corrections and valuations, so this chart is very interesting chart because we all need to understand corrections now are quick. They are very deep, frantic, but recovery is also fast. So if you all can see 2000 से 2003 का जो decline था, slow steady decline, धीरे धीरे investors were losing money every year. After that आप hard decline को देखो, you know, the tenure, the time frame has reduced significantly, but the cuts are very steep and very sharp. Like we are seeing currently also, the kind of fall we are seeing in the markets globally as well as in India, the current fall that happened within a few weeks, these are very steep falls that are happening. But आप chart देख लो, apart from this Feb 2000 से 2003 का जो, you know, there was a weakness in market for probably a 2-3 year. We have seen all past corrections having very sharp up moves as well. So the corrections have not lasted beyond a year or so. छोटे corrections भी आए हैं, sharper corrections for a few months, you know, and the bounce back has also been strong. I believe this time also markets will see some of that kind of a reaction. I'm not saying that we are end, or I'm no one to predict that कि बस अभी correction phase खत्म हो गया है. What I'm saying is जितना steep correction आया है, it is again proving this chart right that whenever the correction ends, the up move will also be very sharp. तो आप तब लेने का try करेंगे, you might miss out on stocks क्योंकि there would be a sharp increase in the stock prices of good company stocks, and we have seen that in the past as well, and I wouldn't want you all to dwell much on it. सब बोलते हैं कि इंडियन मार्केट्स में करेक्शन क्यों आया, हम तो बोल रहे हैं कि हम डीकपल हो गए हैं, रिटेल इन्वेस्टर्स का इतना पैसा है. वी ऑल नीड to understand why FIs are also selling into Indian markets. You look at this emerging market chart, आप समझ जाएंगे. India in 2018 was, trading at a lower premium over other emerging markets. Over next 2 years, by 31st December, this actually rose from, I think, 1.8, 1.9 to 2.3. So 2.3x premium over the other emerging markets India was enjoying. And rather, India was amongst the most expensive markets globally. So correction was due. Irrespective, एक reason चाहिए होता है for correction, but this kind of valuations are not sustainable. And we have seen that in past as well. We all need to understand corrections are healthy for the market. अगर आप long-term markets buoyancy चाहते हो, then timely corrections are required, which was not happening over last year. Every month was a bull run for market. So this kind of valuation excesses जब हो जाते हैं, तो जब ये Fed rate tightening हुआ, so hot money जो हम बोलते हैं, that moved out of India. And I don't think that is bad for the markets. Rather, this will help the markets come up with much more stronger hands. So the loose hands are moving out. We would see much more stronger hands coming in, and that will take our markets to newer highs ahead. So currently from this level, if we see, our premium has actually gone down. So we were at 2.3x premium over other emerging markets. We are now at 2.1. But this is because Russia has actually corrected by more than half. So अगर आप रशिया और टर्की ये दो मार्केट्स को एडजस्ट कर लो, तो द प्रीमियम इज एक्चुअली 1.8 टाइम्स. सो आपका मार्केट गिरा है, इट्स जस्ट के अदर मार्केट्स हैव एक्चुअली फॉलन बाय अ मच लार्जर प्रोपोर्शन, and that is actually not showcasing in this premium ratio. So again, if we see, so लोग कहते हैं तो क्या this premium will actually go away? No. आप देखिए कौन सी मार्केट में FIs बाई कर सकते हैं. सब ये बोलते हैं कि अच्छा FI सेलिंग चल रहा है. Let's see this emerging market का चार्ट. Right, so Brazil is more of an agrarian economy. Why is it trading at 6.5 का PE 1 year forward? वहां पे कंपनीज नहीं है यार ज्यादा. अग्रेरियन इकोनॉमी है, डिपेंडेंस ऑन लॉट ऑन मानसून कैसे जाएगा, गवर्नमेंट पॉलिसीज आर नॉट स्टेबल, करेंसी इज नॉट स्टेबल. रशिया तो रूल आउट हो गया फॉर फ्यू इयर्स. साउथ अफ्रीका इज अ वेरी स्मॉल मार्केट, लेट्स नॉट टॉक अबाउट इट. कोरिया इज अ गुड मार्केट टू इन्वेस्ट इन. फिलीपाइंस इज अ डिसेंट मार्केट. टर्की वी ऑल नो वहां की करेंसी और पॉलिटिक्स कैसा है. सो if any FII wants to invest in global markets, and China +1 की जो strategy चल रही है, China जिस तरह से action लेता है, what they did with Alibaba and its promoter, what they did with their entire education basket stocks, the valuations crashed overnight. So हमेशा we will enjoy a premium over these other markets. However, the premium should range in a respectable historical level and not at the levels it was in December. So be rest assured that India will enjoy a premium over in other investment destinations, and this premium will last, but the excesses have moved out, and that is a good sign for the Indian markets. So just to quickly end this side of the presentation, be rest assured, we at IIFL and myself as a fund manager of IIFL Dynamic Fund, we remain buoyant on India. our belief is to continue to focus on the India growth story, keeping the medium term in mind. The long-term outlook on India remains unperturbed by the short-term hiccups that the markets are facing right now. And therefore, we remain positive, we remain biased in this market. So the question would arise, ke bhai, what are you seeing in the Indian markets, which makes you feel that we should remain focused on this? So I'll just help you all glance through my presentation on the dynamic fund presentation, which will help you all understand why we think India is still a very good market to invest into. So yes, I hope everyone can see this presentation as well.
Yes, Ujjwal, we can see that.
Perfect. Thanks, Abhay. So dynamic fund is actually an all-season portfolio kind of fund that we have tried to construct. We try and focus on sectors. Now, dynamically, we change our sectoral allocations based on what we see the markets moving towards. And that ranges in the large cap space as well as in the mid cap space. And therefore, we say that, this is an all-season portfolio. The stock bets that we usually take are into companies which have a predominant moat in their businesses, which are strong brands, which will help them maneuver against this inflationary trend once this curtails down, because the brand itself has a strong demand pull from the customers. And that allows these companies to increase rates without actually hurting their demand. So we might see an expansionary phase, we might see a recovery phase, even a slowdown, and we try and position our portfolios accordingly. So if we come to India story and why India is still one of the strongest bets we believe we have globally. So despite all the things that we mentioned, if you look for next 2 years, and these are numbers that are published and not our internal guidances, but India is said to be the fastest growing nation globally over next 2 years. Now, as and when things stabilize globally, where do you think investors would want to park their money, right? So I am talking not only from our stance, but also from FI stance. Wouldn't that money come to a country which is, possibly growing at the fastest place globally, because that will give them that alpha that they are actually looking for? So I believe that, current hula hoop that a lot of people are doing in terms of this FI outflow will be positively surprised when they do make a comeback. Government finances are also in a good shape. So unlike 2013, so a lot of people, make very raw comparisons that are 2013 maybe similar situation tha, fir rupee itna gir gaya. India, was in a dire state. They didn't have that kind of forex numbers as well, But current India is very different from then, All the government finances that we have right now are in very good shape. We are seeing record collections on GST. We are seeing both direct and indirect tax as a percent of GDP has seen significant pickup in 22. Also, in terms of forex reserves, we are good enough to last beyond a year. And any which ways, our exports are also at record high. So we have that good export cushion, unlike 2013, So all in all, government finance looks in very good shape. तो हम लोग गवर्नमेंट फाइनेंस की क्यों बात कर रहे हैं? बिकॉज क्वेश्चन इन एवरीवन्स माइंड इज कि क्या गवर्नमेंट स्पेंडिंग ऐसा ही रहेगा और विल इट स्लो डाउन because of this entire scenario that is happening. Let's be very candid. 2 साल बाद इलेक्शंस है. बीजेपी के 2 साल कोविड में चले गए. Although they have done very good job handling this COVID situation in many parts of India. But over next 2 years, they will be on a capex spree, right? And they have the bellwether to do this. LIC IPO also sailed through. More IPOs would and FPOs will be lined up over this year as well. And because the finance is in good shape, be rest assured government spending will be very strong, not only this year, but next year as well. And that's why we say the capex drivers are already in place. And we all should know that, any capex that is done has a multiplier effect on the economy. आपको सिर्फ एक रास्ते की बात कर लूं, 1 किलोमीटर का आप रास्ता बना लो, है ना, एक नया रास्ता 1 किलोमीटर का बना लो, ऑटोस चलने लगेंगी, 2 व्हीलर्स चलने लगेंगे, आजू बाजू घर आ जाएंगे, होटल्स खुल जाएंगी, बस की सुविधा चालू हो जाएंगी, नया रियल एस्टेट खड़ा हो जाएगा. To make that road, cement, concrete, पत्थर, लोग बनाने के लिए, everything is required. A single stretch of 1 kilometer of road will lead to such a multiplier effect on so many industries, right? That this actually, any capex spend by government or private has a humongous effect on various other industries, and that leads to our GDP growth, So एक चीज ये भी समझना जरूरी है कि इमीडिएट इफेक्ट नहीं आता केपेक्स का. तो रोड जितने टाइम में बनेगा उसके बाद वो इफेक्ट दिखेगा, राइट? सो वॉट एवर केपेक्सेस आर पुट इन टुडे, उसका इफेक्ट आपको 6 months 12 months में दिखना शुरू हो जाता है. Now government was anyway spending quite strongly before as well, but the amount of capex that they have planned for this year, आपको उसके इफेक्ट FY23 में बहुत strongly दिखेंगे. And therefore we say the medium term story is still very robust, right? Question also comes on the capex part that on the private capex also things are shaping up well. So our real estate cycle is improving. You see cement companies already announcing new capexes. Most of the large cap companies have announced several growth schemes ahead. If you look at after a very long time, we are already seeing commodity companies coming up with fresh capexes as well. Private capex on a very broad level, I'm not saying it's a full blown out capex spend that is happening, but broad level you are seeing a lot of private capex also starting to move in an upward direction. A game changer for India is going to be this PLI scheme. After a very long time, government has actually come up with a scheme जहां पे गवर्नमेंट एक्चुअली हर एक इंडस्ट्री के साथ बैठी कि आपकी इंडस्ट्री को क्या चाहिए. पहले स्कीम आती थी SEZ आता था, SEZ बनाओ. अभी उसमें मेरी इंडस्ट्री के लिए कुछ है नहीं है, that was not seen into before, right? This time government has done a very amazing job that if I'm giving a PLI scheme to textile industry, the body actually set with top players of textile guys कि actually कहाँ जरूरत है, क्या जरूरत है, and accordingly the scheme has been designed. So anyone who has doubts over PLI not reaching the levels it should reach, will be surprised over a period of time. अच्छा, Rome was not built in a day. So announce हुआ या किसी भी चीज को चालू किया तो ऐसे नहीं है कि रातों रात कुछ चेंज आ जाएंगे. These are multi-year projects. Let's be very optimistic about the step that government has taken, and a lot of industries are actually moving and taking this opportunity within them, so that we will see over next 4-5 years the India manufacturing story gaining big prominence. So China plus one का जो story globally बन रहा है, India भी वही चीज कर रहा है. India is also doing that. So it is decoupling itself from its high dependence on China for varied industries and not only in pharma. We all know we are too much dependent on them on several grounds. Chemicals ले लीजिए, base chemicals ले लीजिए, electronics ले लीजिए, we can just go on with it, right? So these schemes will actually help us decouple on a lot of such imports, which will not only help the government, it will also lead to job creation and will actually add to our GDP growth rate over next 4 to 5 years. And therefore, the medium-term outlook, again, I would say, on India remains very buoyant. Exports all-time high. मर्चेंडाइज एक्सपोर्ट्स ले लीजिए, एग्री एक्सपोर्ट्स ले लीजिए, सर्विस एक्सपोर्ट्स ले लीजिए. सो किसी को भी अगर डाउट था कि चाइना +1 स्ट्रैटेजी सिर्फ कोविड तक है, लोग भूल जाएंगे, उसके बाद तो नॉर्मलसी आ जाएगी, इंडिया एक्सपोर्ट्स विल स्टार्ट टेपरिंग ऑफ, will be surprised that FY22 numbers, we have scaled $400 billion in terms of merchandise exports. This is the first time this kind of a number has been achieved. और आप कोई भी एक्सपोर्टिंग कंपनी के कॉन कॉल सुन लीजिए या उनके केपेक्स प्लान सुन लीजिए, आप समझ जाएंगे कि ये बॉयंसी इन दिस कंपनीज इज स्टिल देयर. आपको सिर्फ एक छोटा एग्जांपल देता हूं. नवीन फ्लोरीन won a new contract, a very large contract. Again, it already was running very high capexes, but it has again won new contracts. We would continue, and this is just an example, not a buy call on the stock, but trying to tell you that textiles ले लीजिए, specialty chemicals ले लीजिए, pharma ले लीजिए. You would see this kind of buoyancy across sectors who are exporting right now. That this story is here to stay. और जब भी ऐसा कोई change आता है globally, this kind of change does not wade off within a year or two. These are long gestation changes. क्योंकि कोई भी कंपनी सीधा आपको पहले आपको be rest assured we are in very good zone in terms of exports. We are going to see a consistent growth in several exports side. Real estate market, I'm sure our country is at record low levels in past decade. Absorption is picked up. India में time correction आया, price correction नहीं आया. So affordability is amongst the best in terms जो last decade में देखा गया है for real estate in terms of affordability. Because of this time correction, we are in a very good zone. And this has helped in terms of registration. So people say stamp duty cuts थे, इसके वजह से ही लोगों ने जाके registrations किए. But you talk to any real estate guys and they would say that, they are not seeing demand tapering off. Demand is still good, not at the best levels, but is still looking good. And I believe it's on a comeback trade. So again, the point that I mentioned in the previous presentation is what these charts actually allude to. India's relative attractiveness in our very good zone will endure. It will stay sustained. Indian retail investors have acted very patiently. I believe at some point in time, the FIs will also make a comeback. So every time historically, and this chart is, last 20, 23 years chart. Now, this is not the first dip that we have seen in terms of FI flows. But आप net देख लो, उन लोग को वापस आना destinations globally, and what India offers in terms of the broad-based industry offering, strong companies, good promoters, these kind to find on a global level. And therefore, despite the current fall, current sharp fall that we have seen, so FIs might have sold around 1.8 lakh odd crores in last 6 months. Just think of it. Retail investors का पैसा वैसे ही रहे. And once these FIs have to come back with such deep pockets, and why I am showing you this chart is basically to tell you that history has always told us that FIs, despite having negative view for a short term on India, they always make a strong comeback, right? And in my opinion, we are going to see that happening as well in this medium term guidance that we are looking at. So avoid short-term noise and look at where India will be when it will be a $5 trillion economy. So what we did was just plotted a graph ke India when India was at 1 trillion, वहां से 2 trillion, 2 से 3 trillion हुआ. So what kind of growth did the market see, right? So markets on an average has grown. Nifty rather has on an average given a 9.5% kind of a CAGR. Even if I'm saying जब Nifty 16,200 something था, post this correction, we have a further upside that we can see in this index. But अगर वो Nifty का 9% CAGR रह जाता है, right? We would see once India scales this 5 trillion, Nifty will be anywhere around 28 to 30,000 levels. So avoid this short-term noise that we are seeing in the market. I do understand we all have portfolios. We need to keep a check. So study your companies more deeply, that whether the companies that you have bought into are good for long term or not. If not, this is a good time to reshuffle and get into good companies. But focus on this 5 trillion economy over next 5-7 years. And that's where in this journey, you will make humongous money from 3 trillion to 5 trillion. And this is what this chart nahi hai कि market is seeing this kind of a fall. Up 1990 se, so this chart of Sensex has been plotted from 1990 and it has endured all kind of pains till now. Security scam, financial crisis, 9/11, China currency issue, demon, US-China trade war, so and so forth. Every time we get beaten down and we come back strongly. So be rest assured, equities remain the best wealth creator, but we have to follow a simple rule: buy, decline, sell at, runs. So what we do at Dynamic Securities, our fund is basically power of large cap and mid cap portfolios. So why large caps? Established enterprises, superior moats, large caps are less volatile, stable returns, higher margin of safety. This is all what is required in current market scenario any which ways, right? Anyone who is actually looking to invest or is starting to invest in this market or rebuilding his portfolio would want to start with having names on the large cap side, which are now in the affordable range, which was not the case when Nifty was at 18,500, right? So we can now own the best of the India stories at affordable prices and also on very good returns out of it. At the same time, we also have mid caps where, we can own quality businesses. They have high growth potential. Many mid caps would rather transition from being mid to large. A lot of alpha generation actually happens at the mid cap space, and therefore having some amount of exposure on quality mid caps is actually required. And this will lead to significant long-term capital appreciation. So the question arises, आप large cap क्यों देखते हो? So let's be very candid about this. Across the markets, we are seeing big is getting bigger. And this chart actually shows that market share across industries. Up banking le lo, everyone is banking with probably an HDFC, SBI, Kotak, ICICI, and smaller banks are facing the issues that we are seeing across, right? Up cement dekh lo, even the current consolidation, everything is pointing towards the big is actually getting bigger. Steel, insurance, pharma, everywhere this trend is happening. So large companies are actually gaining market share, and they are the ones who are actually over next 5-7 years going to take this market to new highs. We believe this big getting bigger trend is going to gain more prominence in coming times, because smaller companies will fail to endure or sustain when times are tough. They already face this COVID types of era, and now this interest rate upcycle. They would not have that financial bellwether to grow or meet their customer requirements, and that's where a customer will actually go to a large cap, and large cap will keep gaining market share at the cost of smaller companies. We all know what happened when demon happened, GST happened, RERA transition happened. Smaller companies, smaller players moved out of the industry, and that's where large companies started gaining more prominence, right? Also, one thing needs to be seen as large cap को लेके लोगों के नजरिए में बहुत issue है. So what we did is we plotted this 3 charts. Nifty returns have never been negative on 10-year rolling basis. So अगर हम 10-year rolling basis पे देखें, Nifty has never actually given a negative return. But if we don't look at that chart, we look at comparative chart to a mid cap or a small cap. So adjusting for risk volatility, large caps have actually outperformed the mid caps if we look at 2-year, 3-year, 5-year, 7-year, and 10-year rolling basis. And the longer your tenure of investment, the higher returns you make over mid caps by being in large caps. And this 3 chart actually sum it very well. Okay, short term 1-year basis pay, yes, the mid caps and small caps have given you significantly higher returns than large caps. But if you are invested for say next 3, 5, 7 years, large caps on a risk adjusted basis have given you better returns than those mid caps. Sector rotation is key to alpha generation in this large caps. So what we actually do is we identify that in current phase, whatever economic phase we are in currently, which are the sectors which are actually going to do well in this time, and we position our bets accordingly. So we might have higher allocation than a large cap portfolio would have to certain sectors, because we believe in this kind of a scenario, we might see this sectors outperforming the others. और जब वो होता है ना, तब within Nifty, you see stocks outperform the Nifty returns. So what we did is over the last 10-12 years, we plotted top 10 Nifty performance, उनका average return as against Nifty का return. Think of it, आप इतना risk लेके mid caps में डालते हो. Within the large cap itself, you have so many alpha generating ideas which give you higher double digit, such significant returns. Look at CY12, when Nifty, top 10 Nifty stocks gave an average return of 73%. You can have such years, you can have such years. It's just about positioning your bets within those large caps in such a way that you make better returns than Nifty. And that is what dynamic fund tries and do. We want to position our bets in stocks which will outperform the Nifty index. So we don't buy the entire basket of Nifty. We avoid stocks which we don't have faith in, where the promoter history is checkered or where the growth potential is not much. We look at stocks which we have strong faith will do good over the next 2 to 3 years based on their fundamentals, and we invest in those stocks, and we are sure that they will perform better and strongly as compared to Nifty. When it comes to the mid-cap ideas, we do our in-depth due diligence for such stock selection. So what we do is we look at companies, we check their promoter history, whether it's not checkered or not. We see whether there is strong growth potential, whether such company has any deep moats, business moats, whether they are going to gain market share or the valuations are reasonable, their return ratios are expected to improve, and their balance sheet should be, having less of a, these are investment criteria. That's when we start looking or buying into a mid-cap stock idea. So we meet the management. We also talk to analysts. We do our in-depth research for our mid-cap stock ideas, and only then we buy into them. We also look at special situations, and by special situations I mean where there is change on management. We all know what happened when Tata Group came in. What happened with Radesh Welling when he joined Naveen Florin. When there is a good management change, the whole business environment changes within the company, and the company grows, which has a spiral down effect on the stock prices as well, right? Secondly, we also look at private equity buying out a majority stake in a listed entity. So we all know what happened with when Baring acquired NIIT Limited, which is now Coforge. Coforge is up 3x, 4x past this acquisition. The same is the case with JB Chemicals when KKR acquired it, Similarly, we also look at IPOs which had a timid start, but are very valuable in our view. So, Lakshmi Organics, Gland Pharma, all this didn't have the kind of rocket beginnings that other IPOs had. But post that, they are up 3x, 4x just because their business had those inherent strengths. So if we get into any such IPO opportunities, we might want to invest in them post their listing. Inorganic acquisitions, Ultratech buying out Binani was such a brilliant acquisition that, even at their size, once they bought Binani and JP Associates over next 2 to 3 years, within that space, Ultratech actually doubled in terms of market cap. So all in all, we identify alpha generating ideas. We also look at this kind of special situations. And these are the charts which actually showcase that JB Chemical post acquisition is up 3x, Coforge is up 4x, Naveen Fluorine is up 5x, so on and so forth. So after doing all this, we dynamically position. When the times are tough, we don't mind being in large caps. When we find corrections and mid caps at valuable price, we then invest in them. So to give you a perspective, in December 2021, we are 90% into large caps. Now, post this correction, we are finding such good values in mid caps that we are lapping up very good mid cap stories, which will give us alpha over next 2 to 3 years. So now our mid cap ideas are anywhere between 22 to 25%. And if the market keeps correcting, we can have large cap and mid cap ratio of 60 to 40. In terms of our performance as on April 30th April, that's what we have disclosed. Our outperformance is of 370 bips as against the benchmark. And I believe we have done reasonably well considering the times have been this tough. So these are the key terms of our fund, and I'm sure the RMs would be keen to help all the clients out with these queries. So that's more about the presentations. I'm open to take up any questions that investors might have, and we can open up the forum for Q&A now.
Please ask your questions. Thank you, Ujjwal, for this detailed presentation. We are opening up the Q&A session. You can ask the questions on Q&A. Ujjwal, before the people ask the questions, I myself have some questions. It was a fantastic in-depth analysis.
Sure, Abhay.
This is more on your fund.
Thank you.
How one can invest into and what are the different money investing styles? Say there are investing styles wherein it can be done quarterly, yearly, one time. How one can do that? What are the different types?
Sure, Abhay. So, thanks for the question. Very recently we have now started with a very nice proposition for our investors. Previously, our model was we used to let investors invest 30 lakhs as a first drawdown, and there used to be two more drawdowns of equal weightage, which was decided by me as a fund manager looking at the market scenario and opportunities. Very recently, we are now coming up, we have now rather came up with SIP facility for all our investors. So now investors can invest into our AIF by having an SIP of 10 lakh rupees for 10 months. And that will help them, average out their investment during this volatile phase. So rather than me taking the decision, the investor himself can have a averaged out investment over next 10 months. And I think this is a very good opportunity for all prospective investors to get into this kind of a fund. So we have three ways, Abhay. One can rather invest 1 CR at one go,
Okay.
or have investments in three tranches, or they can opt for this SIP where they can invest 10 lakhs for 10 months. And that's how investors can either choose from these three investment opportunities.
Thanks, Ujjwal. Thanks for that information. There's a couple of questions in the Q&A session. I just, okay, review the record. This for the recording. There's another question from my side, wherein how many stocks would you maximum or minimum put in the fund?
So, Abhay, we would like to have stocks between 30 to 40 is what is an ideal number that we are looking into. Why such a large number is basically because, this market is not the one where you can have very concentrated bets. Secondly, to capture the large cap portfolio where we see a very strong opportunity across several sectors, it's important to buy into those stocks as well, covering those regions. As well as on the mid cap side, again, I have taken rather a diversified view across sectors, which I believe will do well over next 3 to 5 years. Then take very concentrated bets on the market or on the stock, considering the market scenario right now.
Okay. Thanks for the information. One more question from my side. You have told about the entry strategy of your fund. How you will take a call on taking an exit on the, say, on the stock?
Yeah, again, a good question, Abhay. So, we actually took one exit from our mid-cap ideas already. And thanks for bringing this out, because investors might think, सब अच्छा बोल रहा है, but profit कब book करेगा?
Right.
So I'll let you know that now I can talk about that stock because we have already sold out of that stock. So we had bought into SRF when it was around 1800 odd levels. And we believed in the story for next 2 to 3 years. However, we all know how the markets performed on the chemical side because of all this COVID-like scenario. And I actually got a 40% kind of a return from that stock within 6 months of my investments. So then, the stock was expensive on all metrics, valuations, growth, everything was getting captured. And the type of money which I was looking to make in a 2-year period, I was getting it within 6 months itself. So I booked that profit out.
Okay.
And then I rather seek other opportunities in the market which would have given me that kind of a return or maybe more. So now the stock from the levels that I have booked profits is actually down 25-30%. Will I re-enter the stock? Maybe at an opportune time I might. But do I find that attractive currently? The answer is no. So if I get, see, it's very clear. If valuations are on the expensive side, and if I'm making money, which I thought I should make out of that stock, I'll just move out of that business and not keep building stories, thinking, or fake castles, thinking that, this will probably reach 50 times multiples. So the stock was already trading at 35, 40 times forward multiples. That itself for a specialty chemical, in my belief, was quite steep. And therefore, I thought it's, legit to let investors enjoy that money and not just keep holding on to the stock.
Okay, there's a question. Thanks, Ujjwal. There's a question from Arvind: how to understand the valuation of a company and best value as a layman? How do we understand a layman? What is best?
Sure. Arvind, for most of the companies, it's very simple. So, BSE पे आपको every quarter result आ जाता है और last full year का आपके पास numbers रहते हैं. So result खोलिए, EPS का number रहता है, earnings per share, right? For most of the companies, you can simply find out कि कितने price to equity पे trade कर रहा है. समझो share का price 100 रुपया है और उस कंपनी का EPS 10 रुपया है. वो 100 रुपए को 10 से डिवाइड करो, आपको नंबर आया 10. ये हुई कंपनी ए. उसका कॉम्पिटिटर है, उसका 200 रुपए का प्राइस चल रहा है, पर 10 रुपए का ही ईपीएस है. तो वो ट्रेड कर रहा है 20 टाइम्स पे, ये ट्रेड कर रहा है 10 टाइम्स पे. अगर दोनों का बिजनेस सेम है, दोनों की अपॉर्चुनिटी सेम है, प्रमोटर भी दोनों के अच्छे हैं, तो आप कंपनी बी को बाई कर सकते हैं और कंपनी ए को तभी के लिए आप छोड़ सकते हैं. This is a normal way of doing based on EPS, on valuation basis. However, I would suggest, Arvind, there are so many metrics that go into studying and understanding how and what a company should do. So I would rather advise that you should take help of, people who do this on a regular basis, someone like us or someone like RNs that are there who can help you out with the valuation metrics of company. Because सिर्फ एक multiple या एक number को लेके आप judge नहीं कर पाओगे whether that company is good or bad. Some companies trade at lower multiples because they have inherent risk associated, और इसलिए the market does not give it the valuation it deserves, right? And this was actually seen in this API story. दीवीज करके कंपनी है, वो आज की तारीख में 35-40 टाइम्स या उससे भी महंगा ट्रेड कर रहा है. There were other companies like Solara, Aarti Drugs, which during the peak of API run went up to 25-30 times और आज वापस सब 20 levels पे ट्रेड कर रहा है. So just taking a number will not help you understand whether that business should command that kind of a premium or a discount or not. So you will need to understand the business first. वो धंधा कैसा है, उसके लिए उतना मल्टीपल देना जरूरी है या नहीं है. अगर आपको लगता है ये बहुत ज्यादा हो रहा है आपके लिए, then I would suggest to reach out to your nearest RN and they would rather help you, or seniors like Abhay and all would be very keen to help you out with any details that you all require.
I think there is no further questions. Thank you, Ujjwal. Thank you so much to give this much in detail.
Great, Abhay. Then I think.
Yeah. There's one question. Last question. Let me take.
Sure.
Somebody has put it into chat. Okay. So he's asking. There's Rajesh Jariwala. Is asking, your strategy of increasing exposure to mid caps is in line with the strategy take on economy moving from recovery to expansion phase, or is the exposure increased based on valuation?
So both, Rajesh. Thanks for this question. It is based on both. So our belief is that economy is not shunting out. Unlike, developed markets, jahan pe inflation is at 30-40 year high, we have done reasonably well. Our economy itself is doing reasonably well, and I already showed you all that we would be irrespective, even after the interest rate hikes, agar thoda GDP mein expectations mein fall aa jata hai, will continue to be the fastest growing economy globally, right? So my take is, post this COVID period, we are actually seeing this expansion phase, which will probably last next 2-3 years, क्योंकि government भी spend कर रही है, we all as customers, आप देखो travel tourism boom कर रहा है, you don't get hotels, you don't get seats on flights, real estate is, showing signs of improvement, auto is making such a strong comeback post COVID, आपको two wheelers हर जगह ये दिख रहा है. So my view is, India is in a very good zone. So taking bets on those mid caps is important, but mid caps were very expensive 3 months, 6 months before, prior to this. And now during this fall, we are seeing that those mid caps are actually offering good entry points. So एक है कि India is going to grow, एक है mid caps expensive थे तो नहीं लिए. Now that valuations are on comfortable side, I don't mind parking money in those mid caps. And this strategy will remain this simple always. Whenever a mid cap in which we have also invested, if the price goes up and it becomes an expensive stock, and I don't see future potential in that stock, we will book profits out. I don't mind having a large cap until I find a good mid cap idea again, and we will keep taking that calls periodically. And that's why this is a dynamic fund, So between large cap and mid caps, that mix will change. Within the large cap also, we don't bet on the entire Nifty basket. We take positional bets amongst the strong companies that we have faith in. And this dynamic change will keep happening over the investment horizon. I hope I have answered your question.
Thank you, Ujjwal. I think I don't further questions. Thank you for the detailed interactions and detailed presentation, wherein we could understand the market, and I hope this has solved a lot of people's confusion, wherein how to go about their trading strategies or probably investment strategies. Thank you, Ujjwal.
My pleasure, Abhay. Thank you so much, and thanks everyone for participating in this webinar. Look forward to catching up with you all again. Thank you so much.
Thank you, Ujjwal.